Hello, ETF fans. Mike here with today's video insight. Today is Monday, August 19th, 2024, which means sticking with tradition, I'm just going to do a quick rundown of last week's market action through the lens of ETFs. To do that, what you're going to want to do is navigate over to our Navigator tool on the side panel. So under Databases, Navigator, you can come in here, and this is going to be every single ETF aggregated up by asset class, composite, and category. I went ahead and took some liberties and updated which total returns I wanted to see and what flow time periods I wanted to see within this, which can be done in the column setting by going through and clicking which data fields, columns you want to see in your database. I just set it up so I could look at week to date, month to date, quarter to date, and year to date returns, as well as 1 week, 1 month, 3 month, and year to date flows. So just on a quick basis, last week was a risk on market environment. There was some good inflation data that came out, or the market received it to be positive inflation data, with inflation continuing to come down a little bit. And as a result, risk assets popped pretty much across the board with a few exceptions. As you can see here, as we look at just at a very high level, at the asset class level, equities led with 3.25% return on the week. If we dive into those equity markets, we can see that thematic, right, the riskiest of kind of the groupings, is up 3.71. Global ex-US, 3.48 on an average basis, followed by US size and style. If we hop into that US size and style, we can see that we went back to a large cap growth environment, so return to kind of what we've been in for the last decade, if you will, off and on, but definitely over the last year, that large cap growth dominating the story, up 4.72% on average across 116 ETFs we classify that way. The bottom performer, though, being large cap value, still was up very impressive 2.46%. So just a broad-based rally across all of the equity markets. Another area I just thought dive into real quick, sector and industries tend to have a little bit more divergence of return. So you can see that information technology was up almost 7%. Discretionary, another very sensitive cyclical marketplace, up 4.11%. Then, of course, more of your defensive sectors down here in consumer staples, more of your interest rate sensitive sectors, utilities, and real estate, up nicely, but not near as much as your more sensitive information technology and cyclical consumer discretionary on the week. Hopping into fixed income, what we'll see is from multi-asset, we won't dive into that, but should always kind of sit right in between equity and fixed income, because it is that multi-asset category. Non-traditional is going to be all over the place. Really can't judge a lot from the overall averages of non-traditional, because it's very unique strategies within that group of 776 ETFs. Commodities did have a good week, up 0.93%. Just a little interesting, but as we dive in here, we can see a big part of that was some of this carbon credits and shipping freights. We're pushing those averages up. If we just look at the broad-based commodity ETFs, they were down, which makes a lot more sense given that inflation was down. I'm sure if we dove into the focused here, we'll see, precious metals had a good week. So gold ETFs had a good week, and industrial metals, but energy and agriculture, which make up a big chunk of those broad-based strategies, were negative on the week. Diving into fixed income, we can see up 0.56% across all 689 ETFs. If we dive into fixed income taxable strategies, we're going to see that convertibles, they're going to have the most equity-like returns led, so that makes sense. With rates coming down, long-term taxables had the most duration-sensitive bonds, did the best. So we can also then see more of your risk-type strategies, emerging markets, preferred stock, more of that stock-like return. Again, another long category, government long, high yield. So pretty much all of your riskier fixed income asset classes or categories did the best across the board, with everything being up, but your shorter term, your ultra shorts, up far less, of course, because they didn't benefit as much from that lowering of the yield curve. Diving into municipals, this is very You can be all over the place as well, especially when you get into like the single state categories. Something to point out there. We continue to see more and more single state ETFs come out. So we've got California in there, we've got New York in there. So now we've got a Minnesota ETF that just launched. So a lot more options for those folks looking to dial in a little bit more state opportunities for their clients. There's now those three states that are out there. And if you go out and look at filings, I expect this to be a category that grows very quickly. Last thing I just hop into, cryptocurrency was down in the week and it continues to be very volatile up and down across the board. Ethereum bounced on the week, up 1.3% across the 13 strategies, most of those being the new long only strategies, but there are several future strategies in there as well. Bitcoin was down 1.54%. So broadly, very good week for all asset classes. Crypto is kind of being the one area that was an outlier there, but as we know, crypto can just be very volatile. It is still having a very impressive year-to-date return perspective. On flows, I won't dive into as much detail here on the flow side, but just on a broad basis, 1 week, $18.78 billion came into ETFs last week, split pretty evenly between equity and fixed income, which is interesting. Risk on week, you'd think equities would dominate, but folks are still really diving into the fixed income marketplace. And I do think fixed income is worth opening up just real quick. If we go into fixed income, what you see there is a lot of that long, a rotation into the longer term, the longer end of the curve, with the anticipation of Fed rate cuts coming in the near future and a continuation of that through the end of the year, which would a lowering yield, the yields coming down would benefit those strategies that have more exposure to the duration, the longer end of the curve. So just something to note within that. And your non-major asset classes, non-traditional just continues to pull in assets, whether it's synthetic income, buffer ETFs, or even leverage inverse. Just a lot of money continues to flow into that area. And then pretty much, these smaller categories, not a lot to talk about. Cryptocurrency was negative on the week, but if we go into there, it was mostly driven by 63 million out across the 18 Bitcoin ETFs, which includes both spot future ETFs as well as the long only strategies that came to market at the beginning of the year. So Grayscale continues to really drive those outflows with 199 million out last week. And now it's down to a $13 billion fund, which I believe it started around 35 billion when it converted from the closed-end structure. So just a quick look what's happened in markets last week through the lens of ETFs. The Navigator tool is an excellent way to do this as a starting point to just keep track of what's going on in markets, but also what's going on in the ETF world. So hope you enjoyed today's video insight and you're all prepared to hit the week on the run. If you have any questions, as always, reach out to Team ETF Action. Happy to schedule a one-on-one demo and hope you all have a wonderful week. Thanks for watching.